Hello and welcome back to my channel Iraqi Dinar. Reshape the Iraqi Dinar, a currency on the verge of transformation. For years, the Iraqi dinar has been a topic of intense speculation among investors, economists, and political analysts. Despite Iraq's vast natural resources, particularly its immense oil reserves, the dinar remains significantly undervalued in the foreign exchange market. Many wonder why Iraq has not yet reinstated its currency to a value that reflects its economic potential. The country's progress in rebuilding its infrastructure, increasing financial reserves, and attracting foreign investment suggests that a currency shift may be long overdue. This article delves into the key factors influencing the Iraqi dinar, the possibility of revaluation or a managed float, and the political and economic forces at play. Could the dinar finally be on the path to achieving its true value? Let's explore the dynamics shaping Iraq's financial future. A historical perspective, the dinar's decline and its potential revival. Before the 1990 Gulf War, the Iraqi dinar had an exchange rate of approximately $4.22 per dinar. However, following the war, international sanctions and economic instability led to a sharp devaluation. By the early 2000s, the currency had plummeted to fractions of a cent. The US-led invasion in 2003, followed by years of political turmoil and security challenges, further prevented Iraq from re-establishing its financial strength. Fast forward to today, and Iraq's economic landscape has transformed significantly. The country is producing nearly one-third more oil than it did in 1990, and its monetary reserves are at record highs. The Central Bank of Iraq, CBI, holds substantial foreign currency reserves and over 150 tons of gold, positioning the nation for a stronger financial standing. Despite these improvements, the dinar remains pegged at an artificially low rate, leaving investors and economists puzzled. Economic indicators suggest a stronger dinar. A closer look at Iraq's economy reveals several factors that support a potential increase in the dinar's value. 1. Rising oil revenues. Iraq is one of the world's largest oil producers, exporting millions of barrels daily. With global energy demand increasing, Iraq's oil revenues have surged, contributing to a growing financial surplus. Given that oil is the backbone of Iraq's economy, its steady revenue stream should theoretically support a stronger national currency. 2. Growing foreign reserves. The Central Bank of Iraq has accumulated substantial foreign currency reserves exceeding $100 billion. These reserves provide Iraq with a cushion against external financial pressures and should enable it to strengthen its currency if a revaluation were to take place. 3. Increased foreign investment. Major multinational corporations have started investing in Iraq's infrastructure and energy sectors. For instance, US-based engineering firm KBR recently secured a $46 million contract to develop Iraq's infrastructure over the next 5 years. Such investments indicate growing confidence in Iraq's economic future, signaling that a currency shift may be on the horizon. 4th, lifting of international sanctions. Since the end of the Iraq War, the country has made significant progress in reintegrating into the global financial system. The lifting of Chapter 7 sanctions by the United Nations over a year ago marked a turning point for Iraq's economic recovery. Yet, the dinar remains undervalued, raising questions about the delay in financial reforms. The political roadblocks to revaluation. While economic indicators support a stronger dinar, political dynamics appear to be a major obstacle. Several theories attempt to explain why Iraq has not yet revalued its currency. 1. U.S. influence and dollar hegemony. Some analysts believe that the U.S. government and global financial institutions prefer to keep Iraq dependent on the U.S. dollar. The dollar's dominance in international trade gives the U.S. significant leverage, and a stronger dinar could disrupt this balance, particularly in the oil market. 2. Internal political struggles. Iraq's internal politics remain volatile, with competing factions often slowing down economic reforms. Corruption, bureaucracy, and resistance from entrenched political elites have hindered efforts to modernize the country's financial policies. Until Iraq achieves greater political stability, bold moves such as a currency revaluation may be difficult to implement. Third, regional power dynamics. Iraq's growing economic independence could shift power balances in the Middle East. A stronger dinar could reduce Iraq's reliance on foreign aid and external financial institutions, potentially altering geopolitical alliances. Some speculate that regional and international players may be discouraging Iraq from revaluing its currency to maintain their own economic and political influence. Will Iraq choose a managed float instead of a full revaluation? Given the complexities of revaluing a currency, Iraq may opt for a managed float instead of an outright reinstatement to pre-1990 levels. A managed float would allow the dinar's value to gradually adjust based on market forces while being regulated by the CBI to prevent extreme fluctuations. Advantages of a managed float. Gradual appreciation. The dinar could increase in value over time, allowing the market to determine a fair exchange rate. Reduced economic shocks. A sudden revaluation could create inflationary pressures, whereas a managed float provides stability. Attracting foreign investment. A controlled increase in the dinar's value could make Iraq a more attractive destination for global investors. Several financial experts, including Dr. Mudir Mohammed Saleh, an advisor to Iraq's prime minister, have hinted at the possibility of Iraq moving toward a managed float. This strategy would provide a middle ground between a fixed exchange rate and a free-floating currency, ensuring that Iraq's financial system remains stable while allowing gradual appreciation. Upcoming elections, a potential catalyst for change. Iraq's political landscape could soon undergo a significant shift with the possibility of early elections. A change in leadership may accelerate the process of currency reform, especially if new government officials prioritize economic growth and financial sovereignty. While elections often bring uncertainty, they can also present opportunities for progress. If Iraq's new leadership pushes for economic policies that align with a stronger dinar, investors and citizens alike could finally see the long-awaited currency shift, what this means for investors and the Iraqi people. For years, many investors have speculated on the possibility of a significant revaluation of the Iraqi dinar. While no guarantees exist, the economic fundamentals suggest that the currency is undervalued and could appreciate in the future. Key takeaways for investors. A revaluation is unlikely to happen overnight, but a managed float could gradually increase the dinar's value. Political stability and economic reforms will play a crucial role in determining the dinar's future. Foreign investments in Iraq's infrastructure and energy sectors indicate growing confidence in the country's financial future. Holding on to dinar investments requires patience, as major currency shifts often take time to materialize. For the Iraqi people, a stronger currency could improve their purchasing power, reduce import costs, and enhance overall economic stability. However, the government must carefully manage any transition to prevent inflation and ensure sustainable growth. Conclusion. Is the dinar's time coming? The Iraqi dinar's journey has been filled with challenges, but its future remains full of potential. With strong economic indicators, rising foreign reserves, and increasing international investments, Iraq is positioning itself for financial transformation. However, political complexities and global economic influences continue to delay the process. If Iraq implements a managed float, the dinar could gradually appreciate, allowing the country to strengthen its economy while maintaining stability. A full revaluation may be ambitious in the short term, but a carefully planned currency adjustment could bring significant benefits to Iraq and those who believe in its financial potential. For now, patience remains key. The world is watching Iraq's economic progress closely, and the coming years could bring long-awaited changes. Whether through a gradual increase or a significant revaluation, the Iraqi dinar's value is a story still unfolding, one that may eventually reward those who have kept the faith.